Hello and welcome to Smartkarma's corporate webinar. I'm Sanam Nanwani from Smartkarma. This week we are hosting Comba Telecom. We are glad to have with us Executive Director and Group CFO Ken Chang. We will start the webinar with Ken walking us through a company presentation, after which he will engage in a fireside chat with Smartkarma Insight Provider Osbert Tang. We are taking live Q&A, so I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with Comba Telecom and read more research by Osbert. So please do keep a lookout for messages in the chat box. I now hand it over to Ken to walk us through a short company presentation. Ken, please.
Hi, everyone. So let's load up our presentation. So I was trying to spend about 10 minutes on this presentation. It's a little bit shorter than usually I do it. I usually do it like 15 to 20 minutes, but I try to make it in 10 minutes. And thanks for Smartkarma and CDA to arrange this call. So first of all, I would like to introduce our company. Our company is called Comba. Comba actually means communication be anywhere. It's a company we got listed on Hong Kong Stock Exchange about 20 years ago. And recently in January the 4th, we were also secondary listed in Singapore market with the ticker STC. So what we do is we are a wireless solution provider that we actually cover a lot of countries overseas as well as in China. So in China, we have 30 branches. Abroad, we have more than 20 branches. Most of our R&D and manufacturing capabilities are in Guangzhou. A lot of our international sales are in Hong Kong and Singapore. And obviously, we are a listed company in both places. So we also have our finance team in Hong Kong and Singapore as well. We are a company that very much focus on R&D capabilities. So globally, we have more than 5,000 patents. A lot of our patents and R&D innovations got a lot of awards annually. Next page. So in terms of products, we do 4 major categories. First is base station antenna. This is roughly about 50%, about half of the revenue. Another category is what we call network system or 5G plus industry. What does it mean is mainly covered indoor coverage, last mile coverage, and also the 5G enabled industry networks. So key products like small cell or DAS product. So these are the product that we do. Services is mostly execution services for the operators, focusing on indoor, focusing on last mile. Wireless transmission, major products are microwave type of products. We also have new business like smart manufacturing, etc. So when you go outdoor and see the white boxes, a lot of times these are what we call outdoor macro base station antenna. So that's what we do and what we have been sort of good at. And in terms of indoor products, we do like small cells and DAS product. Small cells are a product that you can actually think about it is a very tiny base station, right? A tiny module that are able to sort of get connected with the broadband, get connected with the data, and able to amplify or diversify the signal across the room or within the indoor space. So able to cover or tailor-made to cover the indoor space adequately. DAS product is also like similar to it's kind of like a network enhancement product that we do. So these are the product type. You can take a look at the presentation. Next page. So in terms of financials, 2022 is really marked a recovery year for us. I think the revenue has gone up by 8.4%, pretty much driven by our antenna business. In fact, our antenna business actually had made record high. Gross profit margin has gone up by 5.2 points to close to 30%. I think we have a better product mix and more efficient sort of R&D process since the design phase, so that we can actually cut down a lot of material costs as well. Operating expenses have come down by about 25%. This is actually despite the fact that we have a growing increase in revenue and gross profit. This is also thanks to our cautious cost control. Our before tax profit is close to 300 million. Income tax, we do have one-off sort of adjustment in the deferred tax asset that increase the tax expenses roughly by about 130 million Hong Kong dollar. Net profit is 190 million. And we resume our dividend as we have positive profit and cash flow, and the dividend payout is about 30%. Next page. So as mentioned, operating expenses have come down. I mean, basically all major categories have come down. We always have been exercising cautious cost control over the last few years, and now I think we're seeing a pretty good positive impact on that. Next page. So we have a net cash position, pretty much stabilized compared with a year ago. Our net asset value is about $1.34 per share, with our share now trading at roughly about $1.50. I think right now we're slightly at the NAV level for the share price. So inventory turnover day, 114 days. I think it's pretty healthy. Our AR turnover day, 229 days. I think has been consistently coming down in the last few years. AP turnover day is, what is the credit term that basically the supplier give it to us actually is longer than what we give it to our customers. I think relatively it's actually pretty healthy sign such that our working capital is even break-even or even negative. Operating cash flow is close to 500 million. Is a pretty big increase compared with a year ago. Gross gearing ratio 12.7%, again is healthy. Next page. So you see on this slide our gross gearing ratio has been coming down in the last 5 years. Our interest-bearing debt level has come down from 2 billion to 1.3 billion, and our net cash has been building up. Next page. Again, I think in most of the years we generate operating cash flow, and operating cash flow has been increasing in the last 2 years. So the 3 operators in China representing about 46% of revenue went up by 13.6%. And it's worth noting that international market went up by 9.3%. Countries like in Europe, in Middle East, our OEM makers actually have a pretty big increase. ETL is our Laos operator that we own about 51% stake. Has a revenue increase by 5% in local currency. Next page. So antenna went up by, is the driver of the revenue. Back in 2022, it went up by 25.8%. Network system went down by 15.9%. This is because last year, operators in China still focus on the macro cell, on the outdoor. And we believe that in this year, and also from our order book, can see that operators start to switch the focus from outdoor into indoor. And I think our network system, on the other hand, in this year will pose a pretty strong recovery growth in this segment. Service up about 3.1%. It's also worth noting that wireless transmission have a pretty strong increase in 2022, and it will keep on increasing. It will keep on growing in 2023. So I think the 5G deployment is still ongoing. There's a lot of numbers here. It also shows that the 5G RAN or the connections, there's still a lot of room to grow globally. Next page. So in China, I think on the relative terms is leading, but still I think the Chinese 5G base station compared with 4G is still less than half of it. So there's still a lot of room. And as well, operators in China will focus on in-depth coverage. And as well, I think we are quite positive in the prospect of how the 5G network is able to enable the industry. So this is what we call the 5G vertical industry applications. Will continue to prosper in the near future. So the four major areas we are focusing on, one is what we call in-depth coverage. Oh, it's already past 10 minutes, so I just try to wrap it up. So in-depth coverage to reduce the cost and efficiency, the environmental friendly, green and low carbon, and 5G plus application. So these are the four major categories that we are focusing on. So we also win a lot of bids, both international and domestically in China. Next page. So I want to spend just a minute, next page, on what we have as a new product for our antenna business, is that we very much focus on what we call environmental friendly green antennas. And the antenna that I think we produce for these green antenna is substantially can reduce costs, operating costs, and save power for the customer. So for every 10,000 station, we are able to save 23 to 34 million kilowatt per year for the customers. For the same coverage, help the customer to reduce the station site, enhance the network quality. So it can bring a lot of good corporate value and social values to the customers. So next page. Next page. So here is the slide we also talk about why we also quite positive in the prospect of the international market and domestic China market for our network system products. Because I think the core value is customer will continue to value the efficiency and the cost effectiveness of the product. So these are the good proposition we can provide to the customers. So these are the sort of snapshot of how the city and the township look like, and how our products are able to cover, the urban side, the township, and the rural area using our products. And this is the 5G plus enabled sort of technology. Particularly, we are very focused on 5G plus smart mining project. Next page. Open RAN is another network system solution that we're providing. It's a sort of like standardized, sort of like global alliance trying to pursue the openness of the wireless communication network. And we are a very active participant in this project. Yeah, so I mean, we want to highlight that, there are a lot of new products coming out from Comba. We keep on innovating. So the new product we talk about is, for example, the green antenna, the radio, the RAN, the open RAN products, and a lot of new products that we're innovating. So, so this is one part of the important group strategy. Keep innovating, keep pioneer in the new field. That's pretty much it.
Okay, well, thank you very much, Ken. I think this is very excellent summary and update about Comba. I think by now the audience should have a much better understanding about the company, and we will then move on to have more detailed discussion. And we also will take some questions from the audience. Okay. Yeah. So I would kick off first. The first thing I want to know is that actually you just complete the listing in SGX. So what's the reason behind that? What do you want to achieve, and what can the listing bring to the company?
Yeah, for us, it's quite a strategic move. We always have established a Singapore office since about 20 years ago. Currently, we have about 30 people. And in fact, as a matter of fact, some of our most senior international sales are sitting in Singapore, covering international account, some even European account, and has been very effective. And also in the business wise, we are also trying to put more resources into Singapore and also surrounding region. So having a listing status in Singapore give us a milestone, or give us a status so that we can continue to expand in this region. And having a international sort of presence in Singapore can help a lot, and also able to facilitate a lot of better flow, better client relationship, etc. Another thing is, I think capital market and money flow into Singapore is also important. So this also gives us another good finance channels as well, in addition to Hong Kong.
Yeah, okay, well understand. Also, I think after you have a secondary listing in SGX, you are actually thinking about like the spin-off and separate listing of Comba Network on SSE in the Science Tech Board. So can you walk us through something about what's more detailed about Comba Network, what is the business, as well as, for example, what is the timeline for that listing?
Yeah, I mean, this is a project we have been working on more than 3 years. And since 2019, we have been working on the restructuring of the group and making sure that that entity is independent and good enough to be spun off into the Shanghai Star market. And the reason behind is that our industry is better understood in the mainland market. The valuation that investor giving out in the mainland is multiple higher than what we have in Hong Kong and Singapore.
Yep.
And liquidity wise is also much better as well. So having that entity being better understood in the Shanghai market and having higher valuation, I think is a good proposition for everyone, for our shareholders.
I see. Do you have a timeline on that?
Yeah, we try to apply for this year, and then the last 3 years is a lot of preparation work, and we try to apply for this year, and hopefully next year we can get it listed. Okay,
great. Also, we would like to know that as a background, can you share a bit more about Comba's ownership structure, as well as what are the management incentives?
The structure is very simple. I think basically the company was founded by two gentlemen. One is called Mr. Fok, and one is called Mr. Tang. And I think collectively right now they have roughly about 36% stake in the company. So Mr. Fok has roughly about 27%, and then Mr. Zhang has roughly about close to 10%, I would say. Yeah. So these gents basically co-founded this company about back in 97 or 98. And then after a few years, they found the business went up very strongly, and they got it listed in back in 2003. Yeah. So that's how it started. And the rest, I think, sort of like in the public hands. Yeah. That's pretty much the ownership structure of the company.
Yep. Okay. What about management incentive? Do you guys own stock options or own direct ownership in the company? Or?
Yeah. We have like a stock option scheme. Yeah.
Yep.
And then I think every year we have the stock ownership. It's all public information up there.
Okay, great. We'll take the first question actually from the audience. Read it out. The audience is actually asking that will the US-China tech war restrict your ability to grow your international business? So what is your thinking about this?
Yeah, I mean, it's obviously all these things is happen, and particularly it's getting it's already quite intense since a few years ago, right? But I think look, right? I mean, our international business was there even 10 years ago, right? We established our US office, I think since about 10, 15 years ago, right? And it's there. It has been growing. So I think it's something that we have to manage the risks now and going forward. And I think for us, I think first of all, I think our products are relatively straightforward, and we do not our product do not collect data, right? Our product is mainly is indoor coverage, right? And antenna. I mean, these are, I think, relatively lower sensitive sort of product.
Yeah, understand.
Number two is I think I talk about our founders. Our founders are actually, they spend a lot of time, or most of their time, in Hong Kong, and they are Hong Kong resident and citizen. It's very similar to a lot of Hong Kong listed company. The Hong Kong go back to the mainland and establish their manufacturing base, right? Yeah, and then sell overseas, right? So we have that kind of background. I think we are small and we're relatively nimble. But as well, I think also we established the base in Singapore and get listed in Singapore. I think this is also another aspect appreciated by our customers. Yeah. So I think having more establishment in overseas, which we do actually over the last 10 years. So this is not because of war we're trying to get away. No, I mean we already have offices pretty much all around the world. Yeah, and our US office is actually quite established as well. Yeah. So I think we are okay. I mean, even though these few years we still grow by our international business is still growing double digit over the last year.
What about just in the US? Do you share with us the growth rate over the last 2 years? Is it underperforming globally overall?
The growth last year, because I think there's one particular product was delayed. So last year the US didn't grow, but the year before that it grew a lot. I think it's more than 100% in 2021. So in 2022 it kind of stalled again, but in 2023 it will grow again for the US market. From the order book, it's actually very, very helpful for the US market.
Yeah, okay, very good. And that extending from that, actually we have the Russia-Ukraine war this year. What exposure do you have in Europe, and is that being affected by the war? And also another thing interesting is also related to the US. We are talking about the banking crisis, about SVB, or even like Credit Suisse. What are you thinking about that? Any impact so far do you see on your business or exposure to Europe?
Yeah, I would say that on the European side, I think I think despite the war is going on, despite the sensitivity, but I think as mentioned, our sales to our OEM makers, actually the European OEM makers, is actually increasing quite significantly. So our market share within that customer actually has been increasing. So I do not think the war itself has any direct impact to anything. Yeah, I do not think so. For the recent event in SVB, etc. But I think it's more impact to the financial industry. So what we are seeing is actually, so there's a distrust of smaller bank. There's a distrust of even well-established bank in Switzerland, right? And pull money out, and obviously Singapore and Hong Kong banking sector is the beneficiary. So communication sector, how it's impacted, I do not see a direct impact on those incidents.
Okay, that's great. Okay, so going back to the 2022 result, it is a record. I think at least we're talking about record earnings. I look at the PVT, it's about 10 years, okay, within the last 10 years. So what do you think about this year? And is it going to be another record, or probably it's going to be the peak? What is your thinking behind it?
Yeah, I think this year, so far so good. I think the order book and the macro aspect of the communication sector suggests that I think what we are heading sort of is in the right direction. I mean, it's the most important thing is, I think we also changed the presentation a little bit. I think we now really emphasize on what kind of value we can provide to customer, right? I mean, sometimes when we innovate a new product, when we push out a new product, we may not necessarily get the order right away, right? Like small cell, we actually have been putting out the product since 10 years ago, right? And it takes some time for the product really get to the stage and get accepted by customers and able to become commercialized, right? It takes some time. It takes some time. But I think, in different product categories, in antenna, in network system, in others, we keep on putting out new products. And that's hopefully that can drive up the revenue, drive up our margin, able to offset certain down cycle if there's any of the old products, right? And also we try to expand more on international front, right? So that international and domestic China market have more balance, so we can have more sort of less risk and more stable kind of growth in the years to come. Yeah. So I think I would say we start the year I think with a pretty positive macro aspect. And I also think that fundamentally, operational wise, I think we also have done a pretty good job over the last few years. So yeah, you can actually see we're able to grow the revenue while we can cut down the cost. So this is pretty good fundamental aspect that I think that we have done, but it takes years to reflect those good changes.
Yeah. Okay. Yeah. Great. I also noticed that the gross margin for the company now close to 30%. Is it going to be a normalized level at that around 30, or actually you have to see a lot more room to further increase over the next 2 years? And also touching on that, probably we are going to focus a bit on global inflation, input costs, what will be the impact on the margin last year and the outlook in 2023?
Yeah, sure. I mean, I think the margin increase mainly, as I said, because of two things. I think one is better product mix. I think if we continue to stick with old product, I do not think we can raise the margin.
Mm-hmm.
Number one. Number two is I think we have a better R&D efforts since the design phase, right? So we are able to mitigate the raw material risk as well, right? And I mean, over the last 2 years, we are also facing a rising input costs, right?
Mm-hmm.
So able to sort of cut down on those costs and produce a health margin for us is also important, right?
I see. So going into the market side, or actually the revenue side, I noticed that China Unicom actually sees quite significant increase in last year. Compared with the other two, it's actually much outperformed in terms of the revenue growth. What is the reason behind it? Is it normal, or it is just the pattern like that? Sometimes you have China Unicom more side, sometimes you have for example, like China Telecom more. I'm not sure about the pattern. So can you walk us through about why China Unicom actually increased so much last year?
I think it's just different cycle. China Mobile happened to ramp up very significantly back in the second half of 2021. Yeah. And so that's why, because of a high base back in 2021, you do not see a lot of growth in 2022 for China Mobile. But for China Unicom, it also happened that they tried to ramp up in 2022. Yeah. Yeah. So China Unicom, I think China Unicom and China Telecom, they formed alliance and they try to utilize the low frequency 900 megahertz bands, and it has been quite helpful for both of them, and to do the combined network together. So they are both benefiting on this shared network as well.
Okay, I see. There is a question from the audience which I also want to ask myself. The question is that, who do you see are your biggest competitors, and what are your competitive advantages?
Yeah, I think it depends on the market, right? I think in the China market, I think for antenna, I think obviously we are number one or number two in head-to-head with Huawei, right? But Huawei is also not considered as our competitor, because in a sense, there are certain components we also supplying to Huawei as well. So we're not necessarily like competitor per se, right? A competitor in the sense that yes, antenna we also try to compete, but I think the antenna market is also big enough so that I think we can comfortably sit at number two, if not number one, right? But I think being able to be a competitive player coming up from China, it helped a lot in the overseas market. I don't think we are, the major competitor in the overseas market sometimes is ourselves. I think is how we are able to, take advantage of the market. It takes some time. It takes a lot of our resources to build a trust with the customer, rather than we are seeing a competitor in the market. Yeah. And in fact, the competitor, I would say the landscape is quite fragmented, particularly in network system. I think it's just very fragmented, and some of the area may not be people that are willing to get into if they are focusing on fast money, for example. A lot of product like small cell, even open RAN products, I do not think you can actually produce fast money on those products. Actually, you have to sink in enough R&D resources take it slow and take a long time to develop all these. And as a matter of fact, only Comba has the patience to do all this kind of thing. I don't think a lot of companies have the patience and the courage.
Any idea about the market share for antenna and also network system that you have?
Yeah, antenna, I think in China, I think we have roughly about 25% market share.
Yep.
25% to 30%. 25% on the low side. And international market, I think we are still low teens. International market. For network system, it's just very fragmented. But I think we are definitely the leader in small cell. In China, I think we have like, what, 30% plus market share in small cell in China. And international market, I think we are quite strong in this type of in-building, indoor facilities. Very, very strong. There's no obvious statistics on that, but I think we are definitely one of the leaders.
Okay, yeah. On the financial side, we see that you have been piled up net cash. So what does the company thinking about any better utilization of the cash? I know that you have gross debt on your book. So what do you think of the, in terms of the currency denomination and any impact about a higher interest rate?
Yeah, I think it's the fact that the interest rate are already quite high. And so it's actually good that we have been cutting down our debt over the last 5 years. So that number actually the about 13 billion, 1.3 billion, the gross the interest bearing debt. Actually, we have even further cut it down in the first 3 months of this year.
Yep.
Yeah. So the good thing is, yeah, I mean, interest rate gone up, but I think the interest expense that we have been paying or we're going to pay is going to be lower. And also the interest income that generate from our excess cash would be higher, right? So I think in terms of funding environment, I think it's better to cut down the debt level, and if we want to expand credit facility, now it's actually looks like in China the credit facility is actually much more available and flexible. Hong Kong and Singapore and the rest of the world is the other way around. In the past 10 years, it's the other way around. It's Hong Kong, Singapore funding much lower than China, but China now is the other way, right? Because they are not increasing the curve as much as Hong Kong, Singapore, and the rest of the world, which is predominantly linked to this US dollar. So kind of like decoupled at the moment, and we also trying to like borrow more in mainland, and hopefully that supplement we have in the whole rest of the group.
Yeah. Okay. Along that line, can you share with us your capex for 2023? And what about the the dividend payout ratio? Is it going to be maintained at that level, or do you have a defined dividend payout policy?
Yeah, we actually have a pretty, as explained, we actually have a pretty healthy operating cash flow. So operating cash flow is close to 400 million Hong Kong dollar. 400 million Hong Kong dollar. Although our net profit is 190 million, our operating cash flow is 400 million Hong Kong dollar. If you look at our EBITDA, actually is even much higher, 750 million EBITDA, because we actually have a lot of depreciation and amortization in the whole group. And our capex last year is about 140 million Hong Kong dollar. Yeah. So with that, actually, we generate quite a lot of free cash flow. And right now, our dividend payout ratio is roughly about 30%. And we have been doing for a 30% payout for a long time already. Yeah. Now, as long as we have positive cash flow and positive profit, we will pay out dividend. Yeah.
I see. Okay, thank you. I think we are pretty much get to close to the time limit for our discussion today. Let me ask one more question, which I think that that would be also quite important and, as well as quite interesting to the investor. From a equity point of view, very much Comba's share price has outperformed the Hang Seng Index so far in this year. So probably on the back of a turnaround in terms of the bottom line. So what do you think are the key risks, and how much do you think the investor need to worry about them for the company and or maybe for the industry overall?
Yeah, I think there are obviously risks, macro risks that are hard to predict, right? So whatever happened on SVB, the bank, and whatever happened about the war or any conflict, I think is unavoidable, right? Unavoidable. And how it's going to affect our business is one thing. But I think, in general, think about right now, I think the risk shock to our business or to our system, I think would be much more in better position to tolerate the risk than before. Because I think geographically, right now, we're really well diversified. In China, the free operators, as explained, is only less than half of the revenue, right? And the other half, at least 1/3 is international business. And international-wise is also spread all around the geography. So you can have war in different parts, but as long as it's not the World War III, right? I mean, there were certain parts that do well to offset certain parts that somehow affected by this kind of thing, right? Also, I think our customer is also very well diversified. But I think the most important thing is, in order to counter any negative cycle, we come up with new products, right? That to offset any down cycle or any downtrend or any unexpected event, right? So I think the key risk here is when we when we spend so much resources into new products, right? What are the potential delays, right? How late the customer can accept to this product and able to fully commercialize it. We have the timeline, but as you know, the world may not be agreeing with our own timeline. Right? That's how the world works, right? So these are all the risks, right? But there's also a risk on the upside too, right? Sometimes we also can surprise the market. Right? Having the new product potentially can outperform and able to be accepted by the customer earlier than expected. And I believe the later, honestly. I hopefully, maybe a few months later, when I do a call with Smartkarma, I can share the good news on the positive surprise side. Well.
Hopefully we can see that in the interim result. Okay, so thank you very much for your very good insight. And I think we have to say that we really have a time with Ken as we walk through basically the strategy, development, as well as the outlook for Comba. So Ken, do you have anything to add?
No, that's pretty much, yeah. You asked me.
Okay. Thank you very much. So in this case, I definitely hope to discuss with you again after your interim result, which should be announced in like August. And anyway, thank you very much for your time today. And I'll just hand over to you, Senam.
Thank you, Osbert, for some very interesting questions. And a big thanks to Ken for a detailed insight into Comba Telecom, the challenges in its sector, and opportunities for Comba Telecom. I would also like to thank our attendees who joined this session live. With that, I would like to wrap up this week's corporate webinar. Thank you so much again and have a great week ahead, everyone. Thank you.
Thank you.
Thank you. Bye-bye.